And we're doing a series on um, just speaking to mortgage lenders so that you can hear it straight from the horse's mouth. I'm a firm believer that you should have options, but I also believe that you should have an opportunity to hear from the lender. And a lot of times that's not possible because by the time we make the introduction, you're already afraid. And so you don't ask a lot of questions. So decided that I was going to ask a few questions and see if they could answer them. At least you get an introduction to who they are. All
I
right.
love
So
it.
um, can you tell me your name first?
Mike Jenkins.
Okay. And Mike, can you tell us a little bit about your background and how you became a mortgage broker or a lender? I'm not sure which one you are.
Just a lender. We're a corresponding lender.
Okay.
Company is Main Street Home Loans. Been in the business. I'm terrible at time. Even though I should be good with some numbers here. I think it's probably been about 6 or 7 years. Started out with previous company, primary residential mortgage, and then found our new home. We've been here since February of 2023. And made the switch over here just because of the options we're able to offer up our clients. So I've been here for about a year and a half. It's been incredible and I'm loving life. Prior to the mortgage industry, just a long history of being in the restaurant industry. So opportunity to work with people, even though it was a little different because providing them with food and beverage and service. Now I'm just able to do this on a financial level. And it's even though it's a lot more taxing, it's a lot more rewarding.
Okay. So can you tell me what do you enjoy most about your job?
Helping people from a financial standpoint. So kind of see myself as a financial advisor, just with a
Mhm.
specialty of mortgages and home financing. Even though we're just helping a client obtain a mortgage to help them purchase their home, we have to do a deep dive into their financing. So we have to see their debts, we get to see their income, their credit, their life circumstances. And it's nice to be able to help find a different solution for somebody that they might not have found from just going and clicking online to go get a mortgage. So that sometimes can require a lot more work, a lot more information.
Mhm.
That's what I get the most out of it is helping find these different scenarios that might be more beneficial for people that they wouldn't have typically um, figured out somewhere else there.
Okay, great. All right. So my next question is, what are the current trends in the mortgage market that buyers should be aware of?
Current trends, are you certain area or just in general?
Just in general. You can answer that however you want.
Yeah, I mean, I think it's a case by case basis, and just like your mortgage. I mean, you're going to buy a house. We're not talking about somebody else's family or somebody else's situation. We're focusing on you. And so there's different markets out there in regards to where you can buy, the prices of homes, the competition out there.
Right.
Um, I would just say that the concern is just being educated to understand what you're signing up for and getting into, because there's, in my opinion, it's almost nothing worse than financially getting yourself into a situation you can't handle, because mortgage is not always an easy way to get out and or get out of. So you need to prepare. Markets market trends change all the time. It's always kind of proven to be a good financial move for people to not only have the ability to gain wealth, but to have stability.
Okay.
And population's growing. People are that are out there currently renting are up against a lot more battle because they're still up against competition in that aspect. And so sometimes people are finding themselves settling for a place that they don't necessarily want to be in, but they were restricted with their time and kind of had to make a move. Um, you're able to afford and own a home, you have that luxury of being in that house for really as long as you want, as long as you can afford it. And we try and set people up to make sure that they can afford that. And it's not a fun conversation. Definitely see. I can't, as a loan officer, can't tell people they can or can't do something, or yeah, can or can't do something. I can tell them if it's possible or not. Like if they can't qualify, that's one thing. But if they're living outside their means or trying to bite off more than they can chew, I'll try and include my opinion there, but that's a choice they have to make for themselves. And same thing with the structure of a mortgage or location, type of loan. I'm here to present the information so that the clients can make that decision on their own. But there's a lot of different people out there, a lot of different personalities, and everybody's looking for something different. So again, the market, like, really plays a large part in that because there's affordability, which is a big piece. So we just help provide guidance to help people make the right decision, and markets come and go and
Mhm.
fluctuate. So we just need to adjust our approach in certain scenarios.
Okay. So let me ask you this. How do you see the market evolving in the next year? That's the question I get asked by my clients most often.
Yeah.
So,
I mean, I actually do like answering this question because I feel like I bring this one up a bunch.
okay.
In my opinion, like, now's a good time to buy
Okay.
because the population's growing and they're not able to build homes quick enough to keep up with this demand. And it comes down to that supply and demand. And
Mhm.
so a lot of people right now are seeing that the interest rates are starting to drop, and that's all the big talk right now is interest rates dropping.
Mhm.
So holding off until the rates get lower will help with affordability, because obviously that is one.
Right.
And I like to stress that as well. There's only one component of your mortgage payments, and it's one factor. So some people get so held up on that one. There are so many other factors to consider, and timing is a large one with that kind of coming up in the conversation. Is as these rates start to drop, more and more people are going to be able to qualify or reach their comfort levels for the type of home they're looking at.
Okay.
Qualifying is one thing. Being able to be successful in getting your offer accepted is a whole nother situation. So the people that are able to buy now not only are going to be able to refinance down the line when the rates do drop and improve, assuming everything works out in their favor and there are no major life changes, um, but they're able to get in the house where somebody that might be holding off till down the line, yes, you might be able to qualify and afford a certain situation or even more, but you're going to be up against more competition. So especially those first time home buyers that might not have a lot of cash available or are going to be reliant on down payment assistance options that take longer to process, it's going to be more and more difficult to get your offer accepted. So holding off, and you can ask people that have held off for the last year or two. I mean, they're kicking themselves in the butt, especially the people in 2021 to 2022 that were, again, rates were going up and they thought we were going to see a bubble here. There is no bubble. If there's a bubble, it's going to be 20 or 30 years down the line.
Right.
But that's not going anywhere anytime soon, just because, again, there's no, unless somebody comes in there with a quick, cheap, easy way to put up a bunch of houses and they find good locations to be able to do so, because especially here on the East Coast, proximity to Philadelphia, DC. I think Baltimore is a very growing market there. And that's one of the factors that we kind of consider when you're looking at a home, because there's markets that are doing better than others. Um, Nobody's got that crystal ball on really where things are going to head. So it's a lot of opinion and just expectations, but that does play into the search.
Okay. Let me ask you this. Can you walk us through the typical mortgage application process?
Sure. So,
And when you answer that, also think about if you could just give us one or two common challenges that arise as a result.
sure. One of the big challenges is just getting over people's their nerves, anxiety of starting the process. They need to understand that we're here to help.
Mhm.
And the only way that we can help is by having the correct information.
Mhm.
So credit pools, people are always spooked about that, giving out their financial information. I understand the concerns there, but they need to understand that a lot of this is going to be absolutely necessary in
Mhm.
order for us to help. And we need to get that before we can really provide them with any true information that's going to help their situation. And we can go over products, guidelines, scenarios all day long, but it doesn't make sense to do that until we have a better idea and look at their situation. So in regards to the timeline, different loan officers, different companies will have different ways approaching that. Usually I like to connect for a phone call up front to just ask a couple of questions to get a general idea, because there may be sometimes something that might be a dead stop that will hold us off from making a move. For instance, bankruptcies, foreclosures, credit challenges, anything that might be a hard stop there. It's good to kind of know that up front so we can have that conversation before putting them through all the extra work. Now, if everything sounds good and we think that we can help, then we'll start the process by getting the application started. And
Mhm.
people hear application, they don't want to be locked in anything. And I always explain it is just providing the information that we need to be able to do our job. And so it's basic information, it's name, date of birth, social, 2-year work history, 2-year residential history, and a couple of government monitoring questions. That's essentially what we're going to need to get started. Now, we're going to dive deeper into those, since the ability to repay the loan is a big portion of whether we're going to be qualified or not. So they're looking at the credit, they're looking at the assets or funds available, and then they're looking at their debt versus their income. So again,
Yeah.
people can kind of relay that information so I can get a general gauge of whether we have a fighting chance or not. Somebody says their score is in the 400s, then we definitely have a big road ahead of us, because we need to get past that credit challenge, get that credit score up so it meets those requirements. If they don't have any funds, yeah, we can look at some down payment assistance, but I can usually tell by the conversation of what's going to be available to them given their situation, because a lot of the down payment assistance is going to be based upon location, income, household size. And so if somebody makes too much money, I can tell them right off the bat that, hey, they're not going to qualify for anything. And so a lot of people have trouble with that as well, and usually trying to kind of really get the detailed information before saying, hey, this is not an option, but also like to kind of give them a heads up so that we're being transparent in moving forward. So the process is to get that information, get the documentation. We try and make it as easy as possible, but every situation is going to be a little bit different. If you're salaried, your
Right.
income's very straightforward. If you're self-employed, multiple jobs,
Mhm.
hourly wage, especially using FHA financing, the stuff is a lot more in-depth. So we need more information and more documentation. But I usually like to connect for a short phone call to kind of get to know them and introduce myself,
Mhm.
get the information to start the application, which you can take it over the phone. I can take it on or direct somebody to my website. So I kind of leave it up to them and what they see best fit. Sometimes if it's a little bit more detailed, I might encourage them to do it online just to make sure that I don't miss anything, because we don't want to have any hiccups down the line because I miss something. And so even though I try and be pretty thorough, can kind of allow them to portray that information themselves and have them write down so they don't miss anything. And then after the application started, we schedule a consult where we take usually about 45 minutes to an hour, go over everything in detail. And there we go over what it takes to qualify for a mortgage. We do a little mortgage 101, and then how that pertains to their particular situation, given their credit, their assets, and their income.
Okay.
And then
So,
hopefully after that, we're pre-approved and ready to go. If not, we go over what's needed to either get them pre-approved or just even in a better position so that they can prepare for the future.
okay. So what advice would you give to someone buying their first home? And when you answer that, I want you to also think about what are some common mistakes that first time home buyers make.
Not providing all the information, not
Okay.
allowing us to do what we need to help out. Um, and so, well, sorry, but apologies. What was the first question? I kind of got caught up on
Yeah.
the like.
And the second one, I know everyone always goes to the second one. All
Yeah.
right. So the first one was what advice would you give to someone buying
Okay.
their first home?
Trust in your loan officer. If you have somebody that you trust in, I mean, you want to work with somebody that you trust because they're
Right.
trusting them to get you in that best possible situation.
Right.
Um, Trust that they're providing you with the correct information, whether you like it or not, because just like the internet, you can go pretty much find whatever you want to hear
Mhm.
online by doing enough research and digging
Mhm.
around there. Doesn't necessarily that it mean that's going to be true. And so a lot of people, if they don't get what they want with their experience with me, they might go somewhere else and come back later, because hopefully I provided a great experience for them after they went through it again with somebody else, to understand that every lender essentially is going to be underwriting to the same guidelines for traditional loans, which is FHA, USDA, VA, and conventional. Now there are some non-QM mortgages and some other options available to certain scenarios or certain situations. But if your loan officer knows what they're doing, should be able to trust in them and understand that we're here to help you, again, whether it's now or down the line. So trust is a big thing there. That's a big mistake because people also try to take things matters in their own hands sometimes, instead of taking the guidance, and it doesn't always work out well for their situation. They need to understand that we're here, our job is to help them get into a home, and if you're working with the right person, then understand that we're trying to work out to help you out the best we can with what we have.
Okay. How important is the credit score for the mortgage approval process? Well, I get that question a lot. And then what steps can potential buyers take to improve their credit score? Just some quick
Yep.
tidbits.
Case by case basis, because it really depends on where the credit stands and what those credit challenges are. Now, a lot of people need to understand that credit, again, is only one portion of it. So we're looking at credit. If you kind of think of it like a piece of a pie, third of that pie is going to be your credit, third of that pie is going to be your funds available, third of that pie is going to be your debt to income ratio. So all the different loan types are going to have their minimums, their minimum requirements. So
Right.
usually with FHA is one of the lower ones with 580. You need to at least have a 580 for that middle credit score.
Right.
Just meeting that minimum requirement does not mean that you are going to be pre-approved just because you have that credit score. Because if the
Right.
credit score is just above the minimum, but they
Mhm.
don't have any funds of their own and they're relying on down payment assistance and they have a high debt to income ratio,
Mhm.
all those factors are considered high risk areas, and it's not going to do it. So we always want to see if we can do anything to help get that credit up in a better position. And that always, again, comes back to the credit pulls here, because people hear credit pull or hard inquiry, and I don't want to damage my credit. Like, I understand, I don't want you to damage your credit either, but we need to see where those scores are, and not only just where those scores are, what has caused it to get in that position. So is it a good credit history? Have you paid your bills? Have you had open lines of credit? Because a common misconception is that not using credit cards and using credit means that you have a good credit score. But they need to understand that credit is built off of showing the ability that you've been able to repay those loans. So they like to see that you have open lines of credit, such as revolving lines of credit and credit cards, fixed payments like installments, student loans, car loans. They want to see you have that credit so that you can show that you can manage that credit by making the payments on time every month, and by making sure that you're not abusing it. And with credit cards, a big one is like maxing out your credit cards. So if you have $1,000 credit limit on that credit card, you have a $900 balance on there. Even though you're not exceeding that credit limit, you are considered as high utilization, and it means you have more that you owe than you have as available credit. So something that we can kind of easily help out with sometimes is, hey, look, pay these debts down and it'll help your credit. If it's bigger issues like that, like 30, 60, 90-day lates, and those are going to be carry more weight, whether it happens to be a credit card versus a mortgage. Those are very much going to play into it. And if in a situation where with credit, sometimes the damage has been done. So if it was just simply somebody just didn't pay their bills and the credit's not in a good position, there's not a whole lot you can do, except for get back on track by starting a new trend of showing that you can make those payments. So we'll take a look at it. I'm not a credit expert by any means. I do know a lot about it, and I do like to kind of take a look. So if it's something that we can help out with and getting the credit up, we're going to do so. If we can't, and damage has been done, then it might just be a matter of time.
Okay. Next question. So, what are the different type of mortgage products available?
All sorts of stuff out there, especially these days, which is great. So
Right.
when you're looking at traditional financing, you're going to be one of those four loan types, which is
Right.
FHA,
Mhm.
conventional. Those are the two more common loan types. There's
Okay.
VA. VA is
Okay.
only for veterans and their
Right.
married spouses. So it
Okay.
doesn't help if you have a family member, if you're not married,
Mhm.
veterans and their spouses. And then there's USDA, which isn't nearly as common, but that's for farmlands and rural areas.
Okay.
Now, there's lots of different programs that you can use, but those are the main financing options. So the entities that are going to lend you the money. Outside of there's alternative options, and usually that kind of comes down to your non-QM mortgages, and it stands for non-qualifying mortgage. It just means that you don't fit the bill to qualify for the traditional mortgage. And so they have other banks that'll offer up these additional options. Usually they're a little more unique scenarios. So it's somebody that might not have traditional income.
Mm.
Self-employment is a big portion of that. So let's use a real estate agent for instance here.
Yeah,
Your
let's do that.
your income might not show as much on your tax returns because
Right.
you would need to write off all your expenses there, but sometimes it can show a little bit more. So there are ways to be able to use some different 1099 options for bars at 1099 that might not, again, might have some write-offs. Bank statement loans, somebody that has a lot of cash flow coming in throughout the business, but doesn't, again, show as much on the tax returns.
Okay.
Um, there's DSCR loans, which are for investors.
Okay.
There's lots of them. And so, like, again, it's one situation of not one size fits all, and somebody may qualify for one, but there might be another better option out there for them. So that's why I say trusting your loan officer, because you can see some stuff online, but we're going to be able to really figure out your situation, what's going to be best for you.
Okay. So, a couple more questions, and then we're done. I know you'll be
Sure.
like, "Yes, Lisa."
Yeah.
How should a buyer choose the right mortgage product for their needs?
Yeah, a lot of that's just going to be guidance here to kind of
Okay.
have us fill them in. I'm never going to try and push somebody into a situation, but I will let them know, like, hey, based off of everything I'm seeing here, this is going to be best suited for you. This is why.
Okay.
Right.
Got it.
So
Great, great advice.
I don't want
Okay.
everybody to walk around and say, it might be like, it's like, hey, well, Mike didn't even explore that option with me. And I try and sometimes like kind of go over a little bit like, hey, look, yes, this is an option, but this is why I would not choose this for your situation. So
Okay.
don't think, hey, look, like he didn't even explore FHA. We only went in conventional again. Yes, you qualify, but here's a reason I would recommend this one.
Okay.
So that's what we're here for. I mean, we do a lot of education on this. A lot of CEs throughout the year, keeping up on stuff. The mortgage industry is always changing, just like the real estate industry. And so, what the case is today might not necessarily be what the case was a year ago. Um, some things change for the better, some things change for the worse. It really just depends on situation. And it's gotten harder and harder to qualify for a mortgage these days, honestly, but it's been better and better for the people that are able to qualify.
Right. Okay. All right. So, next question. What's the most important thing a buyer should consider before applying for a mortgage?
The most important thing for, I don't know. I'd say first step is to have the conversation.
Okay.
We can figure out where they stand. Um, that's probably it there, because I wouldn't necessarily recommend taking, so for credit, for instance,
Okay.
let's say you're on limited funds, or you have some funds available that you've been saving and you want to go ahead and pay down some debt.
Right.
Okay. Paying down debt is good. You're going to be paying less in interest. It's likely to help you out your credit score. But if you're going to use all those funds to pay down the debt just to get the credit up, where the credit might be already in an acceptable position, those funds might have been more useful to
Mhm.
put towards the purchase of the home. And
Okay.
as mentioned earlier, it's a little bit more difficult for first-time home buyers because there's more competition out there. So the ones that, it's not saying that the first-time home buyers are not getting houses. They absolutely are. They're just the ones that are more prepared.
Right.
and have more guidance. Usually say like, come connect with us so we can help give you some guidance on, and maybe you're in the perfect position to go get out there and start putting in offers now. If there's anything that we can do, and even if you get out there and you're pre-approved and you're looking, if you don't find anything or you're casually looking over the course of the next 6 months, understand what you can be doing to put yourself in that better position, because you're taking on a big liability or big debt, big responsibility. So why would you not want to be in that best possible position? What I mean, I guess it kind of changed a little bit, because one of the things that I do recommend when people we have the conversation is, if you're serious about buying a house, is save, save,
Okay.
save, save, because
Okay.
especially in this market, having available assets is going to be potentially crucial. Now, it
Okay.
doesn't mean that we can't get you into a home with little to no money down,
Right.
but having that more money is not only going to give you more options for the structure of the loan, being able to get more aggressive on a property that you absolutely want, but in the event we don't need it, we don't use it, then at least put you in a better position financially once you purchase the home, because you no longer have that landlord or family member to rely on. So in the event that you need to do any renovations to the house or
Mhm.
repairs, or you just want to buy furniture or make it your house, you have that money to work with. Starting out with no money in your pocket and owning a home is not advisable on my end. Again, it's possible, but save again, if especially if you're serious.
One last question. Any final tips for our viewers?
No, just take the guidance, kind of get off your high horse. Don't rely on the internet. Do not rely on TikTok and social media. Again, you're going to see and hear
Sure.
whatever you want to see and hear.
Right.
Talk to an expert. Let us help you out. Um, and kind of come in there with an open mind, and don't act like you know everything. You may or may not, but we'll be able to kind of tell you what's correct or what's incorrect there moving forward. Because again, we are here to help you out. So we're not going to lie to you or tell you something's the case if it's not actually true. So yeah, the less you come, sometimes the less information you come in knowing, the better, because then we
Okay.
can educate you knowing that you have a good foundation, good base. If you come in, you're hearing things or seeing things, again, what they're saying or what you're hearing, yes, that may be true, but that does not necessarily mean either that pertains to you and your situation, or that it's the best option for you and your situation.
Okay. Well, I want to thank you for providing this information. Like I told my clients and people on my channel that I was going to do this series. They'll have an option to hear from a lot of different perspectives, but they will hear from experts. I think it's so important, so
Yeah,
absolutely important that one, people have options, but two, that people are educated. And so
absolutely.
I want to thank you for your time. Any
My
last
pleasure.
things you want to add?
No, no, thanks for having me. That was awesome. Some great questions there. A lot of stuff that we feel on a regular basis. Some new ones, some specific ones. And again, just educate, educate, educate so you can figure it out. It's going to be a big move. And buying a home is not for everyone.
Right.
But if it is, it can be a very, very good move.
All right. Well, thank you.